Welcome to this week's weekly technical analysis. My name is Joel Chandran. And this week we'll be focusing on the Focus 5 stocks at Train to Invest, the TSX, gold, silver, oil, and several related ETFs for the week of October 28th to November 1st, 2013. First chart is the Toronto Stock Exchange 3-year weekly chart. As you can see on the far right-hand side of your screen, we tried to break through 13.5, couldn't do it. We closed lower than we opened for the week. the MACD histogram are still growing. Even the histogram bar is larger than it was last week, which is still signs that strength is still with the stock or index. RSI is coming down off the 70 high, and that's definitely due to the lower close. And Stochastic heading down lower, and both of these indicators showing that there is declining momentum with the index itself. I would expect a bit of a pullback maybe beginning Monday, Tuesday, and before reversing for the rest of the week, unless something comes out and changes the system. 6-month daily chart, as you can see, Monday, Tuesday, Wednesday, Thursday were decent. Thursday we saw the first decline. Friday was a second decline. We did close lower than we opened. And you can see with the the Wednesday to Friday declining, momentum is pulling away from the index. the MACD histogram shrinking over the last 5 days. Again, so we could see a bit of a pullback before it reverses for next week. Looking at the TSX versus its indices, its major indices at least, consumer staples still leading the way, financials, consumer discretionary, financials, consumer staples, and energy, all above the index. We did see a decline in energy, and it's definitely due to falling oil prices, as we'll see later. TTCD, the consumer discretionary index versus its constituents. Magna still leading the way. Canadian Tire pulled higher. Gildan Athletic Wear pulled higher. Here we have the index here in black. The brown we have Thomson Reuters. Tim Hortons turned higher. And the only one that really kind of turned down for the week was Shaw. And I kind of just flattened out a little bit. But overall, the entire index is good. If you had bought and held from the beginning of May, you would have done quite well. Consumer staples, we do have the Shoppers Drug Mart outlier here. In the blue, we have Alum Couche-Tard. The red, we have Loblaws, which pretty much has matched the index. The brown is Weston, orange is Saputo, and the green is Metro. So even though Metro is lower, it's still heading higher, maybe a good candidate to take a look at if you've done your homework on it, potentially Saputo as well. But Shoppers, again, the outlier, which has really dragged the index higher. Capped Energy Index, a lot of down movement here. That's due to energy prices decreasing significantly, but we have CNQ, IMO, and Suncor all outperforming the index as a whole. Talisman is the gray here. The red, Cenovus. This orange color is Husky. And in the green, we have Encana. So if you're looking for outperformers, you still have CNQ, Canadian Natural Resources, Imperial Oil, and Suncor. And the financials, a lot of upward movements. We can see the black line here and a lot of congestion here, but the dark green we have TD, the gray we have Royal Bank, the blue we have BMO, purple is Manulife, and this turquoise light blue color is Sun Life. So you see the insurers are doing quite well. Major banks are all doing fairly well. Laurentian Bank is down here, DNS, and CIBC. So in general, you're doing quite well with the financials, and then due to the Bank of Canada keeping interest rates at 1% for the foreseeable future, insurers such as Manulife and Sun Life are going to do quite well. As you can see, they're definitely pulling the index much higher. Here's the price of oil over the last 6 months, and you can see on the far right-hand side of your screen a very steep decline in oil prices from 98 to just about 94. If it breaks through 94, it's going to be in the negatives, and that's not what we want to see. So for the last 6 months, oil has only been up $1.47 compared to earlier when it was up almost 14 bucks. So we're a $1.47 increase, or 1.58%. And that's obviously weighing heavily on energy stocks, as you saw in the index versus constituents comparison. Here's the 3-year weekly chart for Enbridge. We're at 1, 2, 3, 4 weeks of higher highs. So definitely an uptrend. We do see a MACD crossover here this week, which is showing strength moving back into the Enbridge stock. We have a higher histogram bar, which is above the 0 line, so definitely a positive thing to note. I would expect a bit of a pullback before it turns higher, and that's just my assumption, as some people take profits. But again, Enbridge looking good. We could be heading back towards the 47.50 mark over the next few weeks, and we could break through and potentially even hit higher highs as we come towards the end of the year. Rsi and Stochastic both showing steep increases as people, or at least money, is flowing back into the stock. Looking at the 6-month daily chart, you can see pretty much 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 14 weeks of straight appreciation. So if you had bought under 43 and sold at 45, you were great. I do see some more appreciation. We could hit the 46 mark next week or the week after, and as we will see, continued growth in Enbridge. MACD and the MACD histogram, the convergence divergence measurement is staying the same, but it is still rising up day after day. And we see over the last several days, the histogram bar itself remains at approximately the same height, which is fine, which is a good sign, especially in an uptrend. On the RSI, we've broken through the 70 mark, so we're technically in the overbought area. But with this uptrend, you expect that to occur, and we'll see how high this goes. We could see a bit of a plateau and pullback and an increase, but we'll have to wait and see what the market does. Here we have the stochastic here is in blue because it's hit the $100 mark or 100-point mark. Really has nowhere to go other than sideways. And remember, in an upward or downward trend, you will see sideways of the RSI and stochastic when they've reached their highs and their lows. Looking at Imperial Oil, you can see a 3-year weekly chart. We closed lower than we opened for the week. We couldn't break through 47.50, and definitely due to declining oil prices, we do see the pullback in the stock. Now, while MACD and the MACD histogram are both positive, we do see a shrinking bar this week as the convergence and divergence shrinks. But on a positive note, it did not break through this $45 mark. Tested support and closed above for the week. RSI and Stochastic both showing momentum pulling away, to be expected from such a high to the low week after week. So momentum pulling away as oil continues to fall. 6-month daily chart, you can see Monday, Tuesday, Wednesday, tried to break through 46, couldn't do it. Broke through 45 briefly on Friday, but again, closed lower than it opened, but above the $45 support mark. Good sign. We do see a MACD cross the negative, which is technically a sell sign. And you do see RSI and Stochastic both pulling away. If you want to take a chance, 45 might be a good bet, but you could also be looking at 44 as we see momentum pull away. If oil prices turn around at the $94 mark and start to go higher, the stock will rebound, and there's an easy 50 cents in there for you if you pay attention. Suncor, again, just like IMO, 3-year weekly chart, posted a 52-week high, for the week, but then closed under the 37.50 mark, and again closed lower than it opened. MACD and the MACD histogram, you can see 1, 2, 3, 4, 5 weeks declining MACD bars. We do have almost a convergence point here. Rsi and Stochastic both pulling down, as you can see, due to the volatility of the week bar, and with the Friday close being so low, momentum is pulling away. 6-month daily chart, Monday, Tuesday, Wednesday, Thursday was great. Friday, definitely a momentum changer. Closed way lower than it opened. We do see a MACD crossover on the negative side. Not a good sign. Rsi and Stochastic saying stay away. Again, it could come down, test 36, and move higher, as it's done a couple weeks ago. We see the rise, pullback, rise, pullback. Could pull back a little further if oil continues to decline and pull back higher for the week. But again, I would be surprised if it broke through 36, unless, of course, oil price tanks. Royal Bank of Canada, all-time high here, 52-week high. What can we say? The banks just continue to go up and up and up. We see Friday's close higher than we opened, I guess, for the week. A very positive sign on the weekly chart. Histogram bars increasing. Histogram itself increasing. We're at, up near the highs here. So really, since the middle of September, maybe end of August, it's just been on a tear. Can't complain. Just guys, take your chances and get in there. We do have a RSI or a stochastic potential crossover to the positive side, which is great. But again, this should have been blue. RSI again just enters the overbought position, just crossed over 70. So there is indicating room for it to grow week over week. Looking at the 6-month daily side of things, we did have Friday, didn't quite reach the highs of Thursday, and we did close lower, but we did close above 70. Histogram bars declining on the daily basis as the gap closes, but again, we're still moving up, which is great. RSI is in the overbought position, just barely above 70, and so there is still room for it to grow potentially. And more importantly, we do see momentum beginning to pull here as there is a potential cross up. So if the RSI crosses up on this inflection point, we will see Royal Bank continue to grow over the following week. TD Bank, all-time high again, definitely 52-week high. Looking at the bar, it closed higher than it opened for the week. Strength is there with the MACD and the MACD histogram moving higher. RSI just barely crossed into the overbought position. Stochastic showing a bit of a cross down, but I would assume that's just from it falling from its high and not closing a little higher. You can't please everyone, but again, we're also at the close to $100, 100-point mark, so then it's either going to move sideways or move down a little bit. So TD again, same steep upward trajectory, posting new highs, establishing new support and resistance. On the 6-month daily chart, Friday was lower than Thursday, so we see declining momentum, but we did pretty much close where we opened. RSI is liking that. It's starting to turn up. We may see an inflection point as the stock continues to move higher, or sorry, stochastic. RSI is definitely an overbought position, but again, with stochastic turning up, then the stock will have room to continue to grow higher. MACD, the MACD histogram, continue to increase. We've seen from Monday to Friday an increase in the histogram bars, showing that the divergence is growing. So there seems to be a lot of momentum here in TD, even though it closed a little bit lower than Thursday on Friday. RSI turned higher. We seem to be moving up in price, looks to be, at least for next week. Gold prices have fallen. Again, you can see a steep decline here at the end of the week. $147.10, or 10% over the last 6 months. We were doing great, and then we just kind of pulled back due to the U.S. government shutdown and other various things. appreciated a bit, but this week, just like oil, we saw a very steep decline. Looking at CGL, this is the 6-month and daily chart. With gold prices declining, Monday, Tuesday, Wednesday were decent. Thursday, Friday, we saw the depreciation. RSI showing the decline, or sorry, Stochastic showing the decline. RSI is flat, but again, slightly showing the decline as well. We do have an inflection point here at the MACD histogram. It looks to be crossing down, and if gold prices continue to fall, the ETF will fall as well. Remember, this one follows the pricing of the ETF or of the bullion itself. Our gold bull plus ETF is 2 times the move, and you can see RSI and Stochastic both heading down very quickly. Friday closed lower than we opened. So again, Monday, Tuesday, Wednesday, Thursday, Friday, we do see a declining trend. Another inflection point coming up. It did stay above $8, so it tested support. If gold prices continue to decline next week, however, it will break through, is my estimate. We may just touch these lows here, but if gold continues to decline past its current support level, then of course the ETF will follow as well. Now on the reverse side, the Bear Plus ETF benefited quite well this week. We saw 1, 2, 3, 4, 5 days of appreciation. RSI, Stochastic, both showing improved growth. Looking at a MACD crossover here, so it's just under 20 bucks. We could see it definitely rise to 22.50 with gold continuing the way it is. Remember, as the bears ETF increases, that means gold bullion prices must be decreasing. So be aware of that. Looking at silver, a $2.17 decline over the last 6 months, otherwise a 9% decline. Silver has been kind of all over the place over the last 6 months. Seems to have found a home here between, I'll say 21.50 or 21 and 23 for the last couple of weeks. But again, another decline here before flattening out a little bit on Friday. SVR measures our silver bullion ETF. Declining prices, we don't see a lot of movement Monday, Tuesday, Wednesday, a bit of growth, but then Thursday, Friday, we close below 13. So as you can see, momentum pulling away from the ETF, possibly heading lower towards 12. MACD and the MACD histogram, while not quite exactly at an inflection point, is pretty much heading there anyways. Histogram bars are near 0. So again, things aren't looking very good for this ETF. If you've bought up here, hopefully you've sold by now. If you bought down here, maybe time to take some profit out of the ETF because it looks to be heading lower as silver prices head lower. Same thing with our Silver Bull Plus ETF, HZU. Wednesday was good. Thursday, Friday declined. Still stayed above $8 though. RSI and Stochastic both heading lower. Histogram and MACD are pretty much at 0, so it's flat. I do expect potentially silver prices and potentially even gold to rebound next week, but again, we'll have to wait and see. And on the flip side, the Bear Plus ETF, HZD, green on the movement on Thursday and Friday, couldn't break through $7. Again, we're flat here, and if this crosses up next week, you know silver prices have fallen again. So again, be aware, commodities seem to be declining. Oil is at its, I would say, support level around 94. I would expect it to turn higher, but if it crosses below, then you know it's probably heading towards a 90 fairly quickly, would be my guess. So that's it for us this week. If you have any questions, concerns, comments, please email me at traintoinvest.com. We did start a new class stream here on Tuesday nights at 7 p.m. Central Standard Time. If you would like more information on that, it's not too late to join. You can email myself, and I'll get you sorted out with all the details. Check out our website and let us know what you think. If you have any questions about what we do, I would love to hear from you. So have a great rest of the weekend, and we'll see you soon. Bye now.
The organizer